So we just went ahead and took that scalp. And at this point, it's Wednesday. Wednesday, we've had a decent week. It's been less than a week. If we do any more trading at all, it will be small bites. There are 20 trading days, 24 trading days in a month. You do $100 a day, it's 2,000 bucks a month. 200, 4,000. 500, 10,000. You start doing, $1,000 in a day. You start doing five, six, 10,000 in a week. It's going to cover up a lot of cents really fast. We don't worry about next week. We just trade what is here, the here and the now. I'm bagging on. This is Stock Market Caddy. We're going to let you watch for a little bit this morning, probably up until about 10:30, and then we need these screens. Any questions, let us know, and I'll be in and out. Machine has now been turned off for now. Let's see where they want to take things. Enjoy. Good morning, everybody. I'm Bagadon at Stock Market Caddy, and just like any other day, just getting trading done. We did clean up the drawdown from overnight, right? Wasn't too bad, considering we're still profitable for the week, and we're going to see if we can punch this up a little bit. Beginning balance. We ended last week early, and like around Wednesday, Thursday morning, and transferred out, brought the account to 30. Get in position for the weekend, and we did okay on Friday. And from that starting point, we're at 36.3, which is just fine. This is one market, one. What happened to my little marker there? Let me go get it here. We had written it up one market, 1 week, and we can lose this little thing here, that bracket. Now we trade multiple markets, usually 5 to 7. This view is usually dedicated to the NQ because that's where the popularity is. If you can trade the NASDAQ, you can trade just about anything. And but we trade 5 to 7 futures markets. Doesn't mean that we're in the market or any market every single day of every single moment. That's not what that means. It means that we're comfortable, most comfortable with 5 to 7. And but we also trade options. We trade those options from a few days to usually 35 to 45 days. And our favorite style of option are credit spreads. There are 24 trading days in a month if you trade futures. If you take one day off a week, which we like to do, we're not in the market nearly as much as you may think. That brings it down to 20. $100 a day is 2,000 a month. 200, 4,000, 300, 6,000, 500. You can do the math from there. Your job is to get the fish to the boat and get them on a stringer. We can provide you the education of how we go about this. We can provide you the tools. We're confident that you will learn a ton. We are confident that we can save you money, but I can't promise you or anyone an outcome. I can't, because I don't know the privacy of your own home and office, exactly what you're going to do. We don't manage your money. We don't make specific recommendations to buy or sell. We just kind of show you the ropes, and then you'll be underway. If you are a monthly member, a base member, then we're not going to spend nearly as much time together. We can't. You get to see the algorithms that we look at ourselves every night. From there, you can put them through your own filters and your own processes. We can't possibly know what those are. Some people come with a great skill set. Some don't. But we have a very, very high retention rate of monthly members. It's upwards of 90%, very, very high, which we thank you. But if you want this tool and the other tools, and we have now close to 70 on your desktop, then you want to become an annual member. You got to be a base member because you get other things too. But you want to become an annual member, you will have to go through the Q School once, just once. That's kind of your trial period, your opportunity. If you have TradeStation, which you don't have to have, but might be best, you'll learn that much more. We'll begin to send you files during that Q School. If you decide to become an annual member at the end of that Q School period, you don't have to do it before. We're going to, maybe I should use a democratic term. We're going to kick back. What in the hell is going on up there? Pocahontas. How did Pocahontas get 70 million bucks on a $200,000? Was she doing the Pelosi thing or what? They're coming for him, aren't they? It's a beautiful thing. I think we're going to have a shortage in tar and feathers Pitchforks. It's beautiful. Boy, she's a fake, isn't she? What a scam. What a scam. You imagine somebody spending $100,000 a year to send their kid to sit in her classroom. What in the world? Ugh, not a chance in hell. But in any case, I digress. We're going to credit you back $1,000 and reduce your annual costs. And then you never have to do it again. And if you have a great year, we hope you have a great year. Um, and then your annual costs drop. They drop from one year to the next down to 3,500. We give you 1 month free for your first year, 1 month free for your second year, all the way up to a quantity of six. So yes, we have members that, yep, their annual fee is $3,500, but their effective cost is 1,750 because they've been with us so long, and it just works, right? I mean, they're like on autopilot. And I got news for you. Don't take offense to this. They don't really care what you do. They don't. I know a lot of folks are, what are they doing? It's very private. This is a private club. They're only interested in what they do, and that's what we also teach. Now, it is a community of ideas. It is a community, but it isn't a trading room. We're not high-fiving each other. Yay, yay, yay! Don made money, or Charlie made money, yay! And ringing a bell and doing that nonsense. Um, it's a community of ideas, and I try to serve as a catalyst to help you around the edges, especially in the beginning. But then as the years go on, if the program is working and it's working for you, you're gonna become so independent that it just is a beautiful thing. It's great. And so we are a mentorship to get you started. It is not an apprenticeship. That's a little different, right? An apprenticeship, the plumber's assistant is with them every minute of every day for 5 years, and is handing them the wrench and back and forth. We're not doing that, right? I have our own trading to do. Susan does. Our other members do too. So we're not doing that. But during the Q school, it's very intense, right? We're going to work just as hard as you, if not harder. But then after the Q school, if you decide to move forward, you're going to get these tools and you're going to get underway. And you'll have the framework. I have a daily plan. I have a weekly plan. We share that with our Q school folks. You can adopt it, you can modify it, but this isn't, we're not doing this haphazardly. No, I don't think so. But if you're getting it done with whatever it is you're doing, keep doing it. But if you're not, and you say, hey, I want to get my trading to a business, right? Extracting cash flow from the money flow and getting away from all the emotions of fear and greed. You're not going to learn this at CNBC. You're not, in fact, I don't know. I'm pretty familiar with a lot of the stuff that's out there, and I don't hear, see anyone doing what we're doing. I don't, which is a great thing. They're not. They're all doing the same thing, right? They're all doing the same thing. And they're also mixing in some inflation, deflation, some economic mumbo jumbo from Nolans. I mean, it's pointless, right? It is just that is pointless. We're tracking the money flow, pure and simple. Now, there's many of folks that don't like it. That ain't our problem. All right. So, any case, um, we have a trade that I just decided to put on here, and I do like what I see over here. This is the Rinko. She's yet to really get going. This is the Nasdaq here, and we have a stop loss right up in here. and we're going to see if we can sit on this, see if we can take it down. So I will. We draw a distinction between discretionary trading, very important to have a great skill set, mechanical trading, mechanical trading, and robot assisted trading and robot hedging. It's important to have all of those skill sets, and I will mix them. Sometimes I do great and sometimes I don't. More often than not, I'd be better off just letting the machine handle everything. But sometimes I want to get in there and hit the shot myself. So that's what we're doing. We're going to let you watch for a little bit. Any questions, let us know. I'm bagging on. This is stockmarketcaddy.com. What's a beautiful thing about these people getting chased down? I don't know if you've seen it. There was a beautiful scene of Pocahontas up there, Senator Warren from Massachusetts. Jesus, come on, people! Got a lot of family up there. Got to broom her ass out, and ridiculous. Unfortunately, that's what happens. You get these kids that come in, they're kids, and they go to these Ivy League schools up there. They're like Walgreens. They got a college on every corner up there, and then they stick around and bring all their academic view of the world in there and screw it up to a fairly well. I can speak to that because I left. Bag of left. As soon as I got out, I couldn't. I mean, I got a decent education, but I'm like, Susie, we got to get the hell out of here, and we did many moon ago. But they're asking her. They were chasing, and she don't like it. She was being chased through the airport. They were sticking a microphone in her face. Said, "Hey, Senator Warren, how the devil did you accumulate $70 million in net worth when you're only being paid 200 grand a year?" They don't like that. They don't like it. And the other piece is about this is not only are they going to be chased down and they're worried about the clawbacks, you're going to see some retirements on some people. You're going to see some people moving. They're going to go underground. But they have a very expensive lifestyle. You may think, I may think, hey, you got 70 million, I'm going to get myself that little cabin on the river and fly fish the rest of my life, but for them, 70 million's not enough, because they got the house out on the vineyard, they got one out in Hawaii, they got one out in Aspen, they want this, they want that, and so they want the gravy train. That's why they're having to carry folks like Mitchell out, in a stretcher. Schumer, same thing. These people just don't want to leave. It's a gravy train, and when that gravy gets shut off on them, it's going to be a big adjustment. You're going to see some of those places going up for sale. Little deflation out there on Martha's Vineyard. Great to see, isn't it? I just hope they need to get Cash Patel in there, get Bondi. Bondi's a tough nut. I got to tell you, from not personal experience, but just observations from Florida. She'll get them. She'll get them. And it's a bipartisan thing too. It's not just Pocahontas. I'm not that naive. Ramnesty, another one. The Romneys. Whoops, and we just took a stop there. That's unfortunate. She brought us right back up. Okay, so we're setting this up, and we'll probably trade two little micros, and I do this right. So at the beginning of the week, I still trade usually a mini. Not usually. We can add, but I have other markets, so we have plenty of leverage. So there's no reason to try to overstep it. Um, at the beginning of the week, I'm not more aggressive with leverage. Not saying that, but I am more patient and um, more inclined to, just suffer a little bit of a draw in trying to get a decent trend. Now, once the objective's been met, once I, have my handicap in place for the week, and if it's Wednesday, now my mindset changes a little bit. Now my mindset is, well, if I can tack on a little bit, but I don't want to take away, right? I don't want to take, I don't want to do serious damage and take away the week's work, right? So, and if I'm running out of real estate, so it's kind of like if you were coaching a football game, I would think, if you've run up the score a little bit, you're probably not going to continue to pass the ball over the middle. You're probably going to run some draw plays, some sweeps, and you're going to run at some sort of a prevent, you know, um, defense, and that's, and I play golf, try to play golf the same way, and I trade the same way. Mhm. It's a game like, right? It isn't a game. It's, it's important to Susan and I. It's important to our members. But I can't be thinking about the money, right? If you are scuba diving and you've got to get to a place where you enjoy it and you enjoy your surrounds, the bottom of the ocean. If you are thinking about the actual act of diving, then it could get ugly. And I did do that. I did. I freaked myself out. And Susan and I were certified at one time and did some diving, and I started to think about, and I tell the story, we're coming back from West Palm to Tampa, and we had gone on a 100-foot dive, and I started to look at a condo building. I said, "Holy shit, Susan, that's a 10-story building." They're like, "Yeah." I'm like, "That's how much water was between us and the top." Like, "Oh my God, don't tell me that." Once I did that, that was that. I mean, not from Susan's point of view, but from mine. I just was no, I'm like, I don't think I can ever do that again. And I probably shouldn't have thought about it, right? So we snorkel, and that's okay. You don't want to do something that's uncomfortable to you, right? I mean, so we're still waiting for this to punch up here. I don't know why it's taking so long. Let me go in here and look. Good afternoon. Good afternoon to you. It's morning here, but I think Joseph is in Brazil. Good morning or good afternoon. Sorry about that. We got more microphones now than I used to have here. We got different feeds. We're setting up a little program to trade micros. It isn't trading swing machines, so I'm not trying to confuse anybody. You've got a view on swing machine, but we're setting up, and I'll bring the chart into view. Another little scalping strategy here in a moment, and it's just going to trade its little heart out. And we got a beginning balance of we're $150, right? So we've realized today 150. We're off of a high. We had a lot more. We don't beat ourselves up. But so if you just want to benchmark this and say, hey, what could I have done with micros? So that's why I'm doing it. But I'm not going to do it with a mini because we're in the house. I mean, we've had a decent week. Next week is next week. We have other markets. So bear with me, and I want to get this program up so I don't have to give it much thought. Now, I can also intervene, and if I do intervene, I'll let you know. What I mean by that is I could go up there and grab that 70 or $80. Now that's two micros. If I had traded a mini, that would be five times that, $300, right? So that's one of the things we go through Q School. You've got to learn to trade in proportion with your account size. This idea of doubling, or what do they call the what do they call that thing? There's a betting strategy where you supposedly just keep doubling, and that's kind of silly. You'll run out of money. You'll blow up. Here we go. And I'm going to now I put that trade in manually. Now what I need to do with the strategy, I need to have it adopt a real world position. And what the strategy says, oh, I see what you did, Don. You already put a trade in, and okay, well, I'll handle it from here. And that's what I'm empowering or enabling the strategy to do. Okay. All right. So it now has it. And And so we're going to see how we do. This is a Renko chart. I'm going to copy this and I'll give you a chance to see the chart. It's fairly simple. It's not the most sophisticated program. Um, Now, if you're trying to do this, if you see Renko and you try to trade Renko manually, I think you're gonna burn yourself out. Um, Oops, there we go. And it's trading two. So I'm gonna copy window, paste window. It's gonna load up here. I'm gonna bring it down so you'll see it in the corner. I have it running on another screen, but so there it is. It's a little view. Again, we're not doing this so that you can mimic and trade alongside us. That's not what we're doing, right? And if you are trying to do that sort of thing, I think that's kind of, I don't know, that's not why we're doing it. We're just trying to show you what's possible. Now that's trading 2 micros. The beginning balance is positive 150. So keep that in mind. And if I intervene, I will let you know. Otherwise, I'm going to let the machine kind of do it. And that's the beginning balance. And you can mark the time. It's 11 o'clock. So let's see where we are at 12. Let's see, what kind of damage we do. Let's see if we can. Now remember, if you're trading, micros, and you're trading 1 or 2 micros, and your job is to make, $100 a day, um, it's 2,000 a month. Well, everyone's got to start someplace. You learn a process. You learn, about the markets. You learn about what you can and cannot do. So we'll let it, but any of the trades right now will be handled by the machine unless I, come in and say otherwise and say that I executed a trade. Otherwise, they should all be going in off the machine. So you get a chance to see what that looks like. Um, so let's just see here. So Vatos is that why does the unrealized profit and loss show minus 23 when the unrealized profit seems to be well over? Um, yeah, no, um, unrealized position is when that's the open position. You have not realized the profits yet. So say that you buy 100 shares of Apple, and the position, you're still in the position, and you're down $500. The unrealized position is minus 500. Or maybe you bought 100 shares of Apple and you're up $500, but you haven't closed the position. You're still in the position. Your unrealized P&L would be positive $500. But let's say that when Apple went up $300, you closed. This is for the day. You closed, for $300. You closed it and you made 300. That is a realized profit. I get it. You're not taking every. No, 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 no. We're not taking every position on Swing Machine. No. Sometimes we do, but not now. So what you're seeing here is a snapshot of our daily. No problem. of our daily situation, right? Our daily from midnight, but our weekly. So we started on February 6th. So we usually start every week. We usually start on Sunday nights, but we started this one on Thursday. We consider it a week. The reason was we wanted to get in position for Friday because we knew we were going to take it over the weekend. But normally we start with a beginning balance for this screenshot that you're seeing of $30,000 on a Sunday night. So our beginning balance is 30. Our real-time account equity is showing there. So, give or take the open position. So we're up, and realize you don't see it there, but you can deduce it, roughly what, $5,200. More important than the money though, more important than the money is the profit factor. Is the profit factor, Vatos. Whatever it is you're trading, whatever it is you're doing, you want to be tracking your profit factor. Gross profit divided by gross loss. That'll tell you how many dollars you're making to how many dollars you're losing. That the money will take care of itself. That's how we keep score. And we show you here, but that's really how what we teach and how you want to keep score. Because if you have a profit factor below 1, then you're just losing money. If you have a profit factor of 1 to 2, you're making money, but you're putting shingles on a roof, in Tampa Bay in the summertime. Very, very hard, unless a machine is doing it. If you have a profit factor of 2 to 3, we consider that average. You have a profit factor over 3, you become a money making machine. You're just making money. But the money will vary. But we want to get everyone's focus on the profit factor and away from the money. But everyone else online and everywhere is okay. So Vatsos wants to know, what is the profit factor of SMC? Okay, so um, this we are a mentoring site, right? So so sometimes I'm asked, how much money do you make, Don? What is your profit factor, Don? What is your performance? That's my business, right? I'm not managing your business, Vatos. So um, now we will, um, so I want to be careful here. We're not making any claims. And so we can go in on any of these programs and we can even show you historically what they are. But Vatos, it's learn to trade your game. So if a person is looking and wants to know what the performance of something is purely, and that's all they're looking for, then they really should be just putting their money with a mutual fund. Because all of these programs, and we have close to 70 of them, not just one, and SMC is Stock Market Caddy, right? So we have over 70 programs. We're trading several futures contracts, markets. We're trading options. Um, so if your mindset is, I need to know what the performance is of something, that's for something else. That's not what we're doing here. We're teaching folks how to trade, their own game. That may not make sense to you, but um, that's okay. It's a big step. There's no jumping the shark, everybody. No, we don't make any claims. And I thank you. I mean, we don't. He says it does make sense. Better than making greedy. We don't make any claims, and I think anyone that does is it's they're misleading claims too, right? They're misleading. I mean, we can, I that's my golden. I don't know if you can hear that again. It seems like every time I get on the microphone, she's like, "Well, you know what? I'm going to play my squeak toys." Um, so, for instance, there's a gentleman in Connecticut that like, he's got hundreds of thousands of followers, and he's got a service for this and a service for that and everything. And so let's just kind of go down the garden path while we're letting the machine trade here, and let's just discuss a couple of things. Um, Someone tells you that, and he does, and he does make claims, right? And I don't make any claims. I don't. And he'll say, if you subscribe to this service, our service is making an 87% win rate. That's what he'll say. So people will assume, well, if I win 87% of the time, then I'm guaranteed to make money. So I'm going to go subscribe to that. I don't know. Is that grandiose? It's just, it's misleading. It's misleading because the 87% win rate is irrelevant to a trader. It's irrelevant. How can I say that? Let's assume that you win 9 times in a row and you win $1,000 bucks. Beautiful. You're up 9 grand. But what about number 10? Number 10, you lose 20 grand. Where are you? Got a 90% win rate. What good is that? But he got you to subscribe because he got a 87% win rate. Do you know I can take just about any one of our strategies and your win rate will expand exponentially if I expand the stop loss. But those stop losses could put you out of business, could bankrupt you. So, but he gets a subscription. Win loss ratios are not really important to the trader. Now we do track them in terms of are we performing to the model, and depending upon what you're trading, right? If you're a counter trend trading, you do want a high win rate, but they're going to be relatively small. But and if you are trend trading, the win rate is usually 30 to 50%. You have to be prepared mentally to lose 70% of the time. And that's why most people can't follow the trends because they can't come to grips with that mentally. They think they need to be winning 87% of the time. So the win rate is important. And then you got the other guy that comes in and if I told you our percentages and everything, I mean you wouldn't even believe it, but it doesn't matter. But let's say you meet the guy on the golf course and he tells you this. He says, I got this boutique broker. And if you play your cards right there, Vatos, I'm gonna give you his name and number. And I'm gonna tell you, this guy gets me 10% a year. 10% per year. Imagine that. That's what he gets me. He's been doing it for 10 years in a row. It's awesome. And if you play your cards right, I'll introduce you. He's a boutique broker. Write that in there. He's not just a broker, he's a boutique broker. He really gets to know his customers. He's going to talk about this and talk about that and waste your time. What does that mean? What is that? And the 10% on what? On $10,000? He makes you 100 grand, 10% on 100,000. I mean, on what? So 10% a year. Now, if you're Warren Buffett and you've got, billions and billions of dollars that you're managing and you're getting a 10% return and everyone's getting a share a little, okay, I get that, but 10% a year, and even then, at the risk, what is he risking? Do we get a year that we're down 50%? So a win rate isn't important. A percentage return isn't important to me. And this is heresy. This is absolute heresy to the financial community because this is what they all talk about, right? And then you've got the guy who says, I got bang. There's somebody out there that says, bang, I got a 10 bagger, 10 bagger, option trade. Great. I made, $20,000 on, on an option trade, one option on Tesla. That's what I did. Made 20. Yay. Dave Portnoy. Um, well, I'm going to share the most valuable thing I can share with you, Vatos, in a moment. Then I thank you. I appreciate it. I do. I mean, this is for, the critical thinker. It's good. You should be. I don't get defensive at all. I think you should be skeptical, right? And I like skeptical people. I'm a skeptical person. I think they're critical thinkers. There's a difference though between, and you're not, cynicism and skepticism. So if the win rate isn't important, if the annual percentage isn't important, if the, I made 20,000 is important, how the hell do you keep score? So this is what we do. We take the gross profit and we divide it by the gross loss. This is the great equalizer. This tells the truth. And by the way, the hockey captain up there, when I asked him, to give, I said, hey, you're making claims and everything. What about profit factor? He blocked me. I mean, if you're gonna make claims, then tell me, then make a claim. And I'm saying we don't make claims, and we'll address that too in a moment of how we use. So we got gross profit divided by gross loss. So let's say that Vatos had a gross profit in 1 week of 10,000, 10K, and he had a gross loss of 5K. His net is 5K, right? I'll just put it down below 5K. That's the net. And that's my golden. And let's say we have Joseph. Joseph is here. Let's say Joseph makes 1,000 gross, and he loses minus. So I should have put a minus in here, but we'll just say we'll put it here. Put a parenthesis. Let me back it up here a moment. I'm sorry. Let's say minus 800. So his net, no, excuse me, I'm going to back it up. I'm going to make it 200. So sorry, we'll just say here. He loses 200 bucks and his net is 800. All right, so what does that tell us? It tells us a lot. So Amazon. If you divide the profit factor here, the profit factor is 2. In this instance, Vatos is making $2 for every dollar he expended. In this instance, Joseph, he made less money, but he traded much better. Actually, 2.5 times better, because if you divide 1,000 by 200, his profit factor is 5. He's making $5 for every dollar he expended. Most people, or everybody online or with these subscriptions and everything, they're all touting the money. And even Wall Street and Madison Avenue tout the money because people make decisions on the money, which is greed and fear. We spend days, weeks, months, years. Our members don't, so they will call in Vatos, right? So I had a gentleman, he's been with us for several years. He's in Germany. His name is David. He might even be listening. David called in on a Friday and said, "Hey, Don," his German accent is almost high as a kite. He wasn't high, but he was giddy. He said, "Don, I had a profit factor this week of," and I thought he said 19, but he said 90. A profit factor this week of 90. So now understanding a profit factor, you can you can figure it out, go the other way. If if he lost $100, he made how much? 9,000. If he lost 1,000, how much did he make? 90,000. Now, I think it was the latter because he was as high as a kite and he said, "Don, I think I'm going to take a couple of months off." And I think that's a good idea. Reward yourself. When he came back, then he touched bases with us. It was like, "Oh, how you doing, David?" "I'm doing all right." "What was your profit factor for the week?" 15. 3. 5. You're not going to do 90 every week. But I promise you one thing, if you're keeping score on the win rate, if you're keeping score on the percentage return, if you're keeping score on the money, you don't know what you're really doing. You don't know what to work on. And if you don't know what to work on, you don't know what to improve. So it's kind of like a golfer. You need to know if you're serious about your game, how many fairways are you hitting? How many greens are you hitting? How many putts are you making? How many sand saves? How many of this? How many of that? Because that enables them to know what aspect of their game is weak and what they need to work on. It's the most valuable lesson I can share with everybody. And you don't hear anybody talking about it. They don't. Because it's an acid test. But then at the end of the day, it doesn't matter what I do. It doesn't matter what anyone else does, Vatos. And I mean this because David in Germany, he really doesn't give a shit what I do. He doesn't give a shit what you do. He's only interested in what he does. It's a very mature, trading perspective. I want everyone to do well because I have a vested interest. I want everyone, but I want everyone to do well. I want them to be members from one year to the next. I do. Um, and it's really kind of a labor of love. But at the end of the day, your trading is your trading, right? I ask people, don't even tell me the money because there are people that trade in bigger size than me, and I don't want to feel bad about my paltry, you know, you know, what is it this week? 5 or 6 thousand on the NQ. I don't want one of my members saying, "I Don, I made 50 grand," because he was trading 10 of them or whatever. So just tell me the profit factor. That'll tell me, where you be. Now, average for us. So understanding profit factor, if you're under one, you're losing. You're losing, and you're going to keep losing until you stop and get it figured out. And so we have another member, and he says, "I've been trading options for 2 years. I never heard such a thing, Don. I went back to all my option trades, and I calculated my profit factor over the last 2 years, and I'm like at zero point 0.5. No, that's not good. There's no, that's not good. So the first thing that we did in the Q school was, we made him aware. We started trading the futures, and our goal for the week was to get his profit factor just to one. Because he repeated what he was doing, by the way. The first day or two, he was at like zero point 0.5, zero point 0.6. And then before the week was over, we got his profit factor to about 1.5. I was like, okay, I get it. All right. And he was relieved. He didn't think he could do it. He didn't think, but that's what he did. And then in the second week, he got his profit factor to 5. Third week, then he got his profit factor like over 10. I get it. I get it. You know, you either get it or you don't get it. But we'll bend over backwards in a live environment. But that's what they're doing. And so they're not, and thereby you can stop making decisions. But you start getting up here and say, "Oh, Don, you're up $136. You better take that money. Better take that money. Take that money. Take that money. Take it off the table. Take the money." You start doing that nonsense, and you're trading greed and fear, and you don't have any discipline. Well, you're very welcome. You're very welcome. Um, we're teaching folks how to trade as a business, trading, extracting cash flow from the money flow. That's it. And these models and these programs that we write, they have back tests, they have models. They're not a guarantee of what's going to happen in the future. They're models. So think of it about, in a football game, Kansas City Chief playing the Eagles. They look at, I don't know if they played before. I didn't even watch this silliness the games, but if they had played them before, there's a model of expectation there. It may it may repeat itself, but it may not. And as the game gets underway, suddenly, you begin to say, well, no, wait a minute. We were supposed to be able to pass the ball against these guys, and we're not able to do that. So maybe we need to change it up. The market's the same way. We may have a model, we got dozens of these models, and the back test says, we should be able to do this, and this in the market. We start running it, and it isn't. It's not performing. So we may have to change the model. We may have to run it slower, faster, wider. You know, we got to change it. To that extent, you're the coach. You're flying the plane. You're doing the surgery. You're playing golf. You're doing it. Not me. Not the machine is there to help you, but you got to do it. And that is a very mature perspective, and most people don't want to be bothered. They really just don't want to be bothered. Not you guys, not Vatos, not you guys that are here, but most of the people that, are in the football stadium, they don't want to be bothered with this. They just want to put their money in a mutual fund you know, get something out at whenever. And your broker, he isn't even gonna know what the hell you're talking about. You ask him a profit factor, what the hell are you talking about? He won't even know. Like, what are you talking about? I mean, they're asset gatherers. That's all. So, any case, didn't expect to go there, but um, probably the most valuable insight I can give a person in less than an hour. And you got to ask yourself, well, what's my profit factor for the past week? What's my profit factor today? What's my profit factor for the last week? I've been trading for 2 years, 5 years. What is my profit factor? I've been following some guy and he's got a model that I'm following. Well, what is it? What is it? So we're still trading, right? The machine has got hold of this trade. We put it on. We have had a run up of 179. We're down 99. Could we intervene? We could. We could. And so I'll go ahead and do that just to show you. I'm going to just come in. I'm going to turn the strategy off. The machine asks me, at least it should have asked me. I didn't. Oh, that's kind of weird. So let's go in here and close it. All right. And I manually took the money. I paid $100, 2 micros. Do you have the patience and the discipline to go do something else with the rest of your day and come back tomorrow and do it again? Maybe you do it quicker, maybe you do it sooner. Because remember what I said, if you can demonstrate to yourself, to your spouse, that you have the patience, you have the discipline to come in and do that, and you do it every day, then you're gonna have an extra $2,000 in your pocket at the end of the month. Maybe you need to do that for 5 or 6 months and build up a war chest and then say, you know what? Maybe now I'm gonna get 200. but you get greedy. You only got $5,000 in your account and you over leverage the 5,000 trying to, hit the home run, and you lose, 20% of your account on one trade. You'll be out of business, and you'll be like, honey, we got to put more money in the account. You don't want to do that. You can be um, over leveraged with an account that is 5,000. Certainly you could over leverage it, but you could put 500,000 in and still be over leveraged. So you got to learn to trade in proportion. The process is the same. Okay, so I'm going to turn the strategy back on, and I just sit back, listen to some music, read a book, relax, get on the treadmill, and wait for the next bus. And so the strategy is back on. And if we get another trade, you'll see it go in. I'm sorry, I keep turning on the wrong microphone. So I'm not sure where I lost everybody there. I had the mic on, but we did go up and intervene, right? I captured that $100, right? So we started at, I think, at 150, and so we captured it, and we then put the program back on. And if we get another trade, the machine will put it in. If I intervene, I'll let you know. We're not trading Swing Machine. We keep a view of Swing Machine, and but we're trading another little program that's in that little chart right there to the right. You can see though, she's actually counting those bricks for us too, by the way. If you can see that, this is all um, whoops, I didn't mean to do that. Oh, Donald, I better reset that. There we go. They're actually counting them. So there's a program running here, and but we took the trade off. So the point I was making is that as you begin to scale, maybe you're running a program, and your goal is to make $100 a day. So maybe you make $100 on the NQ, you shut down. Maybe you make $50 on the ES and you shut that one down. Maybe you make 25 on this, maybe you make 100 on that one. And the next thing you know, you got your three, four, $500 a day. Do that for a month. And then you got your 10 grand and just keep doing it. And now, build up your confidence, build up your account, your trading account. And then you slowly, very, very slowly, you repeat, you rinse and repeat. You do exactly the same thing. Only now you increase your leverage just a little bit. You couldn't do that before. These micros have only been around for a few years. Before, you had to come in and you had to trade the minis right in the beginning. But now you can scale them up a little bit, scale them down, and just stay within yourself. It's one of the things that we teach, and it's very similar to golf. I mean, what you don't want to do is, go out. Anybody can anoint themselves a golfer, right? Go out, spend a lot of money on clubs, and go to the driving range once or twice, and then go to the course. I hope you're not in front of me, but oh, it's everything. Yeah, it's everything. Beto says that that over leveraging kills a ton. It probably kills them all. It probably kills them all. And you can over leverage a small account. You can over leverage what others might perceive to be a big account. And partly they just don't understand. They don't understand the profit factor. What they're doing is they're trying to make so much money, and their money, 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 and it's a casino approach, and they blow up. Well, it's human nature to over leverage. Well, if it's your human nature, then you probably shouldn't be trading. Um, because you know people. That's why we can't make any claims either. People are going to do what people do. We can show you, we can give you the instruction, but if a person doesn't have the patience and the discipline and the maturity, and they're going to get in there and I don't give a shit what Bag of Don has to say. I got a $10,000 account and I can get three or four of these minis on, and that's what I'm going to do. Because if you put on, for instance, here on the NQ, I mean it's up $200, right? So 300. I mean, if you put on three of them, yeah, you're up 600, in minutes. But if you're going to do that, you're going to blow yourselves up. And that's why we need 3 weeks, um to teach a person. We want you to be here for the long term, and to be able to come in and do it. It's trading as a business, right? This isn't and it isn't going to be buy and hold Bitcoin and with all the pretty people, and let's go to Miami and have Cosmos, and talk about how rich we're going to be, and don't think that hasn't happened before. Okay, so there's been communities before crypto, and all the people who owned America Online, all the people, it's don't think that that hasn't happened before. It's happened many, many, many times. Okay, so we ran over an hour, and I just want everyone to know it's 11:30. At 12, we will need to take back our screen. We do these YouTubes to create some awareness and to answer some questions. And thank you, Vatos, for your questions. Um, to inspire folks to go visit the website, give it some thought about what it is you're doing, if you're doing any trading. If you are and you're getting it done, keep doing it. Just keep doing it. If you're not, suggestion is that you stop, you think, you look around, you listen, and the big distinction between us and everyone else is that we want to teach you and empower you to make your own decisions and to for you to carry it. That is how confidence is derived. That is how self-esteem is derived. When you face challenges and you solve those challenges, you develop self-esteem, you develop confidence. When parents solve their kids' problems when they're 30 years old, they're still a shitbird. They just are. You know? They just, the parents are taking care of everything. So we're not going to be making your decisions. We're going to teach you. We're going to show you. I'm taking a risk, but it's with, you know, a a good risk because we don't accept everybody. By the way, we'll go live. Um, we don't do it at any one particular time because of my schedule, so I don't have a schedule. Yeah, it's shit luck, Vatos, that you stumbled on us because we don't even advertise. Stock Market Caddy, just so that everyone knows too, just the background. I'm not from Wall Street, right? For 25 years, I taught surgeons how to do surgery, so I'm as far from it as you can get. Um, in the early 2000s, I said to my wife Susan, Susan worked for IBM and for Lotus, I said, "What a bunch of bullshit this is." Now, we had done very, very well in the markets, and I pride myself in being a very good discretionary trader, and we'll show you some of that. We had done well, but I said, "What a crock of shit this is." It is. It's rigged. It's fixed. It's a I could give it other descriptions. And Susan said, "Well, what are we going to do?" I said, "Well, we got two choices. We can hand over everything that we've got thus far and give it to somebody else, or we can learn to trade the markets ourselves. So what do you want to do? Let's do it ourselves." Great. That's what we set out to do. Stock Market Caddy was not even a consideration at all. That came about in 2012, and mainly because we were just pretty much bored with what we were doing. When you're trading this way, it's just pretty boring and it can be lonely. So Stock Market Caddy came out of the ground there. The cornerstone to Stock Market Caddy, though, was, and I said it at the time to Susie, was that it was going to be learn to trade your game. I did not want to be handing anything out. I did not want to be managing. There was some consideration, but I dispensed with it very quickly. I did not want to be managing anyone else's money. It's just not worth it. It just isn't. Nobody's going to watch your money like you, for better or for worse. And it's just a lot more fun to play your own game. So that's kind of where it came from. Um, and what we do. It's a mentorship though. It's not an apprenticeship. So we draw a distinction there. You're gonna have to get underway, and we try to set that up. But and over the years, a lot of these tools are ours, but not all of them are to that extent that we've had members that including David in Germany, and have said, what if we did this? What if we did that? And we will program those situations and put them into a beta indicator or strategy or a trading robot. An indicator is an indicator or study, one and the same. And a strategy or robot, one and the same, is when the machine is actually doing the trading. And so some of the tools that we now have that have passed beta and go into the library came from members that were doing various things. Now, some of the brokerages now, if and I don't know where you are, Vitos, if you are outside the United States, you don't have to have okay, and the machine just put in 2 micros there, and they put them in long, right? You see it on the screen, and they just went in. They're in up there. That's 2 micros. Um, if you are in another part of the world, you don't, or in the States, you don't have to have a trade station to be a monthly member. So it's $100 a month. As a new monthly member, if you want to connect early one morning, we'll give you a 1 hour tour of everything, and we'll let you watch in a live environment, the whole day. And so you just have, but that we have to schedule that. If you have desires of wanting these tools on your desktop, um, and you do need to go through the Q school, but you do need to have TradeStation. So if you're in another part of the world, one of the prerequisites is you would want to find out if you have TradeStation. And TradeStation's not available in every country, partly because some of these countries aren't as free as you think they are. And we're even learning that here in the States. We're free, we're pretty free, but we're not as free as maybe we all thought. But when it comes to trading, we're pretty free. And so you would want to find that out. Even here in the States, there are brokerages that don't allow automated trading. You can have all sorts of tools and everything, but they're not, and they're never going to allow it. They're never going to allow it. TradeStation is phenomenal. I see it as a surgical tool. So I'm coming from a surgical background. It's a surgical tool. I would be comfortable taking TradeStation into a surgical suite and doing surgery with it. It's that good. It's really, really good. Probably better than they know. I have no affiliation with them, just a real, real happy customer. So just to do the math here, we have 2 micros in. We're currently up, what is it saying? $15. Let's say 15, right? If we were trading a mini, it would be 5 times that, right? 5 times because we got 2 of them. If it was one of them, we'd only, be 10 times. But it's a great place of to learn, right? But you can't use such little margin that you treat it nonchalantly, like, oh, it's only 50 bucks, I don't care type thing. Um, because then you can become sloppy. So, you've got to, and it's similar to like learning to fly a plane, right? You're not going to learn to fly a 747. That's not going to be your first plane. Your first plane is maybe going to be a bush plane, or maybe I don't know. I'm not a pilot, but maybe what are a Cessna, a little Cessna, maybe a little prop, and then maybe a little bit more than a turboprop, and then maybe a jet or a Gulfstream. You're going to go gradually, right? You're just not going to jump in. So don't just retire one day and throw millions of dollars into a brokerage account and start firing away. I mean, because next thing you know, you're going to be going back to work. Don't do that. There right now, these are the biggest, deepest markets in the world. There are grown men and women in New York, in Chicago, in Singapore. We have a gentleman that's going to be in Q School and from Singapore. We have another gentleman on Monday. He's from the Netherlands. They're in London. They're all over. They're trying to do the same thing. There's some guy, he's sitting in his big yacht off of Monte Carlo, and he's got his trophy girlfriends jumping off the back of the boat, and he's sitting down in the basement of the boat, the fool, and he's got a bank of screens and he's trading. You're trading with them. They're trading with us. Some may have a micro on. Some may have a mini on. They may be trading hundreds of minis, thousands of them every day. Some days the market is very calm. It's relatively calm right now. Other days it's going to be very violent. It's like the surface of the ocean. I haven't, and by the way, the code for Swing Machine Plus, this radar is only available at TradeStation. The code that Susan and I wrote is over 800 lines of code, and it's all unique. It's not using stochastics, not using moving averages, not using MACDs. You can put that stuff on there, and occasionally it will line up with something. If you put enough stuff on your charts, eventually things will begin to cross or do whatever, but it would never perform the way that this is performing. That's why we're totally fine, letting folks even watch and get a glimpse. We can trade multiple markets against each other, multiple time frames, multiple. That's when the robotic trading takes on a robotic hedging strategy. Now we could intervene here. We could. I'll let it go a little bit. Now I think we started this at 10:30, right? I think we've been doing this for about an hour. When you're trading like this, the macro, the economic mumbo jumbo from New Orleans means nothing. Zero. It means nothing anyways. It means nothing. Gold this, gold that, narrative this, narrative that, inflation, deflation, interest rate that, Fed this, Fed that, Trump this, Trump that. None of that shit matters. So you just jettison it. You can just clear your head of it, read about it, talk about it, do whatever you want with it. But the love of Pete, don't trade off of it. Keep your life simple. It doesn't matter. It doesn't. It's the producers of those shows of the media that attach meaning to the market, and they don't know their ass from a hole in the ground. I'm sorry to be rude, but they don't. They know nothing. Okay, so we're going to be closing down here. So we'll finish here. And I can once again, I can come in. I'm going to disable the strategy and I close the position. So we didn't do any much damage. We didn't make a ton of money, but you know what? We didn't stress, no stress. Um, for me, trading a mini level is nonchalant as that. Trading two micro. So we had a beginning balance of 150, and let me make sure my mic is on. And as an example, and less than an hour, we're trading two micros, we make 150. Right? We stop. You go find something else to do with your day. Play with the kids. Go play some golf. Go fishing. Sit by the pool. Do something else. Do the other job if you want, and do that for 20 days. So $100 is 2 grand. You'll have 3 grand. 6 months, you'll have another 20 grand. And you'll have what? Confidence. Something I can't give you and nobody can. Don't empower. I'm not your guru. Don't empower anyone else online or the Wall Street Journal or Kramer or anyone else. Become your own guru. Play your own game. It's a hell of a lot more fun, right? So we just come on here just to inspire you. I have had some people though, and it's okay, right? I had one gentleman, he says, "You're pissing me off." An email. He goes, "I'm just pissed off about it. I don't have the capital. I don't have the time. And I'm thrilled that you're doing this, but I don't send me your emails anymore because they annoy the hell out of me." I'm like, "That's all right. Then we just take them off." Not trying to annoy anyone. Some people don't want to be challenged though, right? Some people don't want to. They don't want to know that you're doing it and it done. They don't. And we don't concern ourselves with it. Right? When you go out and play golf, you're just playing your game, right? You're not worried about the other guy. It just, rode up and maybe he's sitting beside you, maybe he's in the other cart. I mean, you don't care, do you? As long as he doesn't, slow you down. Any questions, let me know. We're going to let you watch right up until about 12 o'clock, and then we'll have to say goodbye. If you push the notification button when we do punch up, whenever that is, you'll get a notification and you want to, punch in. If you here in the last 10 minutes or last 5 or 6 minutes, if you have any market, because we can do this with stocks, right? We can do it on any interval. So maybe you have a stock that you want me to plug in right here, right now. The hockey captain talks about time stamping. I time stamp this. I time stamp my my keister. I'll go ahead and plug it in. And you give me the market right here, right now. I'll plug it in. We'll look at the interval and I'll show you where swing machine would have been long or short. And I'll do it right now if you want. You let me know. I'm sorry. I keep turning on the wrong microphone. Um, we got two different microphones here that we can turn on. All right. So what I was showing was is that we could change the interval from 2 minute to 5 minute. What I was commenting on is the 60 minute. So you're seeing an instance where Swing Machine is actually having a drawdown. Swing Machine will have losing trades and he will have drawdowns. It's not possible to trade without a losing trade or without drawdowns. Now, just as I turn this up, he very well could have been up on an hourly, and an hourly signal stretches usually from one day to the next. An hourly signal can last for hours, it can last for 2 weeks. We can see hourly signals be up 15, 20 grand. And you would say, well, Don, that's what I want. I want that. Of course you do. I do too. But you have to understand as a trader to get into those big fat winning trades, you have to understand that you might experience a dry down. Well, I don't like that, Don. That's part of the game, and that's what has to be described to you and shown to you. Now, there are ways to ease into this. When we start a person in Q school, we start at a 1 minute level. Why? Because we can keep the drawdowns and the run ups, small, relatively small. Equally here, though, when we increase our time frame from 1 minute to 5 minute to an hour to a daily to a weekly, what do? We scale down, right? We don't increase leverage, we reduce leverage. Here on this one, this is showing calculating a mini. It could have been a micro, right? It could have been a micro. And you would only be down, 486. Still significant, for a micro, but um, the larger the time frame. So that is a something that we have to discuss and teach and show and work through that. But we can also change these, to dailies, um, weeklies, and let me just show you. So we can come here and I'll just go ahead and change this as an example to weeklies. Let's just even get over the daily and you could say, well, that's what I want, bagger. That's what I want. Yes, if you had put on a mini contract on a weekly 68 weeks ago, one of them, you'd have 73 grand. If you had to put on five of them, you made 300,000. They put on thousands of them. 39 weeks ago, 44. You're like, that's what I want. But the problem is, or the challenge is for a new trader is the likelihood that you're ever going to get any of that is slim and none. The reason being is you're going to be listening to your inner ear. You're going to start seeing the money and it's going to start fluctuating and you're going to start getting greedy and you're going to start getting fearful and you're going to be what pilots call listening to your inner ear. And you're going to do something that JFK did. He got himself into an airplane, JFK Jr. He got himself into a high performance airplane and he took it out at night over Cape Cod where he couldn't see the horizon and there's that summer haze and he wasn't skilled. And he began to listen to his inner ear. What a horror show. He couldn't tell up from down, down from up. And he killed himself and he took two people with him. You don't want to do that. You don't want to do it. You've got to learn how to fly the plane, play the game, and you got to go small and you got to small increments and over time, patience, discipline. That's a rare commodity. And when we're on the subject of intervals, we'll just put this all back to a 5 minute. Oops, I want to get them all back there. When we talk about time, time is the most valuable commodity of all. You can't buy it, you can't sell it, you can't make it, but you can waste it. And I don't like wasting any of mine. Nope, I don't. Nor does Trump, right? Trump's asking people already how much time we got left. He's very cognizant of time. Once he gets to be a, they say that once they become billionaires, I'm not a billionaire, but I do value my time, and I hope you do too. Um, so in any case, I hope you've enjoyed it. Hope we stimulated some ideas. I hope you visit the website. I hope you've had a good trading week. I can't say when we're going to be back up, but if you push the notification button, we'll punch back up. Probably Friday midday. Our trading for the week is on this NQ. We're done. We're done. It's Wednesday. Um, we don't like to trade on Fridays, so we won't be trading Friday. We're up and over our weekly goal by a little bit on one market. We have other markets that we're trading. We have other options that we need to attend to. We do all of our option placement usually at the end of a day, not at the beginning. I'll just share that with you. And we got all kinds of additional tools if you're an options trader. In fact, let's go look. This is a beautiful thing. This tool here gives members nightly the best option trades. Tesla, we were telling everybody last night, get ready for the bounce on Tesla. The machine was telling everybody to buy a call debit spread at the end of the day yesterday. You'd be in the money a little bit as an example. And then on the dark side, um, look at these. These were telling, to buy puts, buy debit spreads. And you can see the Phantom Vignette. They were there yesterday, but they've already pulled in. Old Dominion Freight pulled in. This is where we get them. If you're going to a chart and trying to trade options from a chart, you're going to struggle because you're not taking in. This is all based on the option formula. Once you get your options from here, you want to go look at a chart. That's fine, but you might, you know, consider the math behind the options, which we have done. Options are all math, and we trade them. We don't trade them in a trend. We trade them counter trend. So with that, we're going to say goodbye. Thank you, Vatos, for your questions, and enjoy the rest of your trading day. Enjoy the rest of the week. You can email us your questions, and you're also welcome to call us. I'll take phone calls anytime, and if I'm available, I'll pick up 9 a.m. to 9 p.m. And if I'm not, you leave me a date and a time, give me a couple, and I'll confirm back to you, and we can always have a chat. But I just ask you, if you do call, please have looked at the website anyways. And some of the, if there's, it's the first question I ask. So if somebody calls and says, they haven't looked at it, I'll kind of have to maximize my time and ask them, please take a look at it, and then have specific questions, because hopefully we can answer some of them there. But happy to chat with you, discuss what you've been doing. If you're getting it done with whatever it is you're doing, keep doing it. If you're not, or you're swinging for the fences, or you're hodling your Bitcoins, good luck with that. I hope you get it. Some people are going to get rich. You can get rich in a bubble, but you can also go broke. Mm, It's up to you. Thank you. Thanks a lot, everyone.